Hi traders, and welcome to my video on the Harami Candlestick Pattern. This is either a bearish or a bullish candlestick pattern. You can use it on any trading instrument and any chart time frame. This is a pound-dollar 1 hour chart. I prefer the 1 hour charts and above simply because I find the signals tend to be more reliable. It's because they contain more price data than say the 5-minute or the 50-minute chart. So the Harami candlestick pattern is a very basic candlestick pattern you can look for. I've marked a couple here on the chart. Basically what we're looking for is for a bearish Harami, we want a long ball candle as we have here. See this long ball candle, and then we're going to look for a candle that opens and closes below the bull candle. Ideally you want the wicks to be included within there as well. Okay, and it's as simple as that really, and basically the whole point of a bearish Harami is to spot a reversal to the downside following an uptrend. As you can see, we have our uptrend here, and what you do is you look to enter on the low of the initial candle from the Harami pattern. So this is the bullish candle in a bearish Harami, so you can enter on the low of this candle, a breakout below there. Some traders might use the wick. Okay, personally use the body in this particular setup just to get in slightly earlier. In terms of stop loss, we can place our stop loss just above the high of the Harami formation, so around here, which is 10 to 15 pips, which is a relatively decent stop loss on the 1 hour charts, and this would have been over 60 pips profit potential in this particular move. Once you see price start to stall like this from this level of support, it can be a sign that the reversal is perhaps come to an end, and price is going to continue on the overall trend, which is in an upwards trajectory. I wouldn't take all bearish Harami trades. Every time there's a Harami, it doesn't mean you should sell. A bearish Harami should always sell when there's a breakout below that candle. There may be other factors in play. Always keep a lookout for areas of support and resistance, the longer term trend, and you can use technical indicators for confirmation if you wish. And as always, make sure you've got sensible money management. That being said, it can be a good way to time entries into reversal trades. I personally prefer to trade with the trend. So I would perhaps look for a bullish Harami during this uptrend and look to take that as an entry into the trend. Okay, there's another bearish Harami I've marked off here. Okay, we wouldn't have this wouldn't have actually triggered, if I can get that line. This one here, okay, it's the same principle. We've got the big ball candle. The candle opened and closed and was within the ball candle. The bearish one following the bull candle, so we could have entered on the breakout below here, or the wick if you like, but you can see the price didn't actually reverse that far and continued in the upward direction. Okay, in terms of exiting this trade here as well, if we just extend that line, you can see that this was actually a resistance level, was tested there again, and it holds up as support here. So again, that could have been a good indication to exit the trade there. And then you can always look to jump in on the trends, different strategy altogether, but there is a breakout there to get in on this this upwards trend that we are seeing on this nice pullback here. Okay, and you do have some bullish candlestick patterns within there. You've got 3 white soldiers, which is basically 3 up candles with a pullback and the breakout of the top of the 3 white soldiers there. I do have a video on that particular candlestick formation and many others. It's just good to be aware of as many different candlestick patterns as possible, because they can help to filter entry in terms of should you take a trade or shouldn't you, and to perhaps start thinking about looking to exit part of the position. For example, if you were in a long trade here and you've seen this bearish Harami, you might look to, I don't know, close part of the position or just move your stop loss just to be wary of them forming. Okay, so I just wanted to show you a bullish Harami candlestick pattern. Again, the principle is the same. This time we're going to be looking for a long bearish candle, which we have here, followed by a bullish candle. The bullish candle should open and close and range within the bearish candle, as this bullish Harami here does. That's as simple as it is to identify a Harami candlestick pattern. This time we're going to look to trade a reversal in a downtrend. You can see the overall trend here is down. Okay. Granted, we did have this pullback here, but then we're looking again, the price is making lower highs, so the trend is continuing in a downwards trajectory. That being said, we see this Harami candlestick pattern. This level of support is formed here. Okay, that was previous resistance. It's been breached. It's become support. It's held up well. We have almost a triple top candlestick pattern formation forming there. Triple top is basically triple bottom, sorry, which is when the support is tested at least 1, 2, 3 times, and then a lot of traders will be looking when that happens for the neckline, which is the resistance within the triple bottom candlestick pattern there, to trade this breakout. Granted, some traders would have been looking at this wedge pattern as well that we have forming to trade on the breakout there. So all the indications are there aside from the Harami candlestick pattern that perhaps we're looking to go up. You can see again the trend making higher lows despite the short term making lower highs. So the bullish Harami may be a good entry point for this. As before, the entry based on the Harami candlestick pattern is the high of the initial candle. As you can see, once price breaks out through there, with our stop loss on the other side of the Harami formation here, around 50 pips, would have been a good place to enter into this reversal of the downtrend, which in fact had around 400 pips of profit potential. Okay, again, you can also use other technical indicators to confirm entries. I wouldn't just take Haramis as they appear on face value. I would be, drawing trend lines, support and resistance, all your other formations like your wedge patterns, diamonds. I do have videos on those, and your flag patterns as well. Just various things you should be aware of when taking your trades. Have good money management, making sure to don't let winning trades turn into losing trades. For example, after this breakout here, we'd want to lock in the trade at least break even. Perhaps look to take some profit up here somewhere once we see the stagnation of price, the lower highs, and a reversal to the downside, and then you can consider re-entering depending on your trading strategy on the pull back to this level of support here. Okay, hopefully that's given you a clear indication of the Harami candlestick pattern and the various ways in which you can implement it within your trading. Thank you for watching. Please like and subscribe for more.